record.
Welcome to Wage Cucking with JMO.
Welcome back to Wage Cooking with JMO. I am not JMO. JMO is here though. Hey guys, how are you?
Hello, how's it going?
Not too bad, not too bad. Been a pretty wild week, I guess. Well, wild couple of weeks. Yeah, I mean, how are you guys feeling after that traumatic time?
Yeah, I'm feeling pretty good actually. The whole situation is kind of ridiculous. I mean, I don't think people realize what's really going on, but either everything is fine or we're on the brink of a collapse of the financial system as we know it. It's one or the other, right?
Yeah, I guess with the USDC situation, which we're going to talk about, my only thing was like I was on a sailboat where I'm sure JMO was invited, but I was really keen on buying the USDC dip when it went far enough down, but I didn't have everything with me. It wasn't possible. I bet JMO did, but we can talk about that later.
Yeah, that's why I don't go on sailboats. There's no money made on sailboats.
but there is a lot of money lost.
There is money lost on sailboats. Yeah, I think the whole let's talk a little bit about the whole USDC situation. There was news that came out from one of the banking partners, Silicon Valley Bank, which USDC uses as one of, I think they have like 6 total banking partners, and that was one of them. There was rumors that they were insolvent, and then like suddenly the rumors became true. And there was a whole probably like 48 hours of FUD. We saw the USDC price crash all the way down to, I want to say at a stable price of maybe like 85 cents, where like there were some like pretty big flash crashes. I saw Kraken went down to 60 cents in one candle.
Oh, wow.
Where
did you see, where did you see Curve price go to?
I think Curve went down to like around 85 cents.
Against USDT?
No, it went lower than that against USDT. USDT was actually trading at like upwards of like $1.05 at one point. It's a pretty interesting market, but obviously the way Curve works is that they have pools of stablecoins, right? And it seemed like USDT was the only safe coin that people wanted to flock to at that point, because the biggest pool on Curve is Curve 3 pool, which is DAI, USDT, USDC. And if you look at the composition of DAI is like 60 or 70% backed by USDC. So essentially like 2/3 of the pool is derivatives of USDC. So then the Curve pool, in theory, it should be 33% each coin. But as the coin percentages decrease, then like the price of like the coin that is in demand goes up. So like I think at one point USDT was down to like 4 or 5% of the pool, and then at that point USDT was trading at, it's an interesting market. It was trading at $1.05, but it was actually trading at more than that relative to the pool, because the remaining assets of the pool were valued at well below $1.
And I guess a part of the interesting thing with the Curve pool is that it's unlike a Uniswap pool, a traditional Uniswap pool, where the price of the different assets in the pool will simply fluctuate by how much is taken in and out, which I think is called a constant product. But in the Curve pool, I don't have the algorithm memorized, but it's a much more complicated, because it's designed for assets that are supposed to have a pretty stable relationship, right?
Yeah.
So you said it was only 5% USDT left, but
yeah,
even then the price was not okay. Whatever that would be, like $15.
You know, if it was a Uniswap pool, it'd be trading like 50 cents or something. If that was
exactly
if that was the case, I think they have like different algorithms based on pools. Like the stablecoin pools will have a different one than like say the Tri-Crypto pool. But yeah, in general, like Curve essentially makes it so if you have a pool of like assets, you get as close to 1-to-1 as possible at all times, unless there's like extreme duress in the pool.
It's back to what I was asking. So were you able to get any trades in that you want to mention or you can talk about where you were not just completely gambling, but where maybe you had a way to hedge a little bit? Or did you get to a price where you say, "This fuck it, this is stupid, I'm just gonna buy"?
So I woke up that day and it was it was probably like evening USA time. So like the news had already come out, but the whole aftershock of the whole situation hadn't really set in. And like basically up until that point, when I started trading, there wasn't an exact, like Circle didn't come out and say, we had X amount of money in this bank that may or may not be ours at this time. They were silent for a while, and then they came out and said they had some exposure. Basically, what they said was they had 24% of their deposits in banks, and they had 6 banking partners, and one of the banking partners was Silicon Valley Bank. And then later in the day, they were pretty transparent about it. Actually, they just came out and said we have $3.3 billion tied up in this bank. So yeah, so like I actually started trading a lot of the perpetual future markets. So Bybit specifically has a USDC T perp, which sounds like one of the dumbest markets of all time. Like if you log on to Bybit, you're trading dollars against dollars. But then, like, as I was going through these markets, I noticed there were liquidations happening on this market, meaning like the people were borrowing leverage trading and getting liquidated trading dollars for dollars, which I found hilarious. So a lot of the stuff I was doing was it basically like looking at the funding rates of the various markets, looking at the prices, because like anytime such a catastrophic event that like sends a systematic shock throughout all markets, you just know markets aren't going to be efficient. Like if people aren't reacting correctly, and a lot of them are just like trading based on panic, meaning like a lot of the crypto markets are fragmented. There's thousands of USDC pairs, thousands of USDT pairs. There's markets on chain. There's markets in various exchanges, and like the prices of them fluctuated quite a bit. So like a lot of stuff I was doing was like basic arbitrage. One thing also that I was doing was there are some exchanges or some sites that have USDC hard coded as $1 into their platform. So like the strategy I was using was anytime USDC was below $1, I would buy up a decent chunk and deposit on a platform where the USDC is hard coded at $1, and I immediately profited like whatever the spread was at that point. And then eventually a lot of these protocols realized what was going on and had to shut off USDC deposits. But it just shows that it's like the system isn't really built for something like this, where like the second biggest stablecoin like falls off peg a decent amount. And the other thing is like I don't think there was really any information or any risk for USDC to actually not be backed at 1-to-1 by US dollar. It was just the most people that hold USDC, I'd say, don't have a Circle account. Like they either bought it or used it on chain or on an exchange. But at no point did Circle stop redeeming USDC. The only issue is like a lot of the news came out like over the weekend where banks are closed. So basically people are holding their breath until Monday, hoping that like USDC would redeem their coin to $1. Like basically I looked at the whole situation and I did like a little bit of mental math. And I think there was like 43 billion USDC outstanding. Circle deposits 75% of it, and like US treasuries, that they get like 4 to 5% a year on that. So they're making like at least a few $billion a year. You look at their balance sheet, like the last round, I think they raised at $10 billion. Well, let's say like that they had 3.3 billion of the 43 billion in the Silicon Valley Bank. The bank itself, even if I guess we can talk about this a bit later, but the bank, when a bank goes insolvent, it's not like FTX where all your money is gone. Like it just means that it's bought up assets that are trading below. They basically, the business model of a bank is they take your money and they try to make more money elsewhere with your money, and then they don't give you the difference. But they usually, because banks are boomer run, they're traditionally risk adverse. They're buying stuff that makes a few percent on your money, but there isn't like huge downside risk. So like a lot of the stuff that Silicon Valley Bank was buying were just like mortgage-backed treasuries, and like when interest rates go up, they have to sell these at a loss. But the loss isn't like 50% or something. It's like a few percentage points like over the course of the year. But it adds up if you have these huge deposits. So I was estimating like at minimum they would get back 90%, and I think 90% is quite low on the on the whole scale of things, but at minimum they would get back 90%. So the whole is something like a couple hundred million in a stable coin that was market capped at 43 billion. So then like it started trading below spot, so it was like at 98 cents, 97 cents, and then like you see liquidations happening on chain, and then suddenly it's down to like 92, 93 cents, and it went down to 87 cents. So I actually bought quite a bit up at 87 cents. It just seemed like there was no chance that it would, the value of this would go below 87 cents within the next week or so. And I think I timed it pretty well. But it just shows like how immature the market is right now. I'd say like people still have the flashbacks of UST and FTX, even though those two situations are completely different. Like I've had like non-crypto friends message me that held USDC saying like, is this another USD situation? Like, or is this really going to zero? Should I get out now? Stuff like that. But it just shows like a fundamental misunderstanding of the situation. And in my eyes, until Circle announced that they weren't redeeming USDC, then like it should be worth $1 or very close to $1. So the whole situation to me was kind of bananas.
What about the kind of the B2C to max take? I mean, he's always very bearish on, I think, literally all other crypto businesses than himself, which is good.
Yeah.
So you get that other take, but he was saying that depending on what to do with redemptions and when they would know that the money would be available to them from the bank, that you get this arbitrage loop where it's like you buy for 86 cents and you send it, that you JMO, you would buy on a Curve for 85 cents, just an easy number, and you would send it to Circle, redeem, let me guess, for the bank, and then I guess you just loop it back to anything, could trade back into it at a ever decreasing price.
Yeah, I think what he was saying though is that like because there's going to be such a rush to exit, and it's unclear if it's actually backed at 1-to-1, even if it's backed at like, let's say 97 cents. If like a substantial portion of the supply gets redeemed at 1-to-1, the remaining portion of the supply will get redeemed at far less than
because it is actually worth less over time.
Yeah,
because you're always stuck with the one that may or may not exist in the future. Weird thing, I was thinking about this about bank runs, and I'm sure volumes have been written on this, but bank runs are weird because if you have any, we learned this with FTX, if you have any, like the smallest inkling about the probability of a bank run, just look at how much it's going to take you to take the money out, because depositing is free. So you're like, okay, so I can take my money out from this asset and change it into USDT. I can do that for, let's just say really early. So I can do it for 0.05% on Curve, but then, or I can sit and wait for everybody else to have the same thought. So you get it. And I guess with the Silicon Valley Bank, all the boomers, they ran straight for the door with their whole portfolios, with their hedge fund. They were just out of there in what you could basically call their own bank. Mm-hmm. So, I mean, I don't think we're that stupid. I think they look pretty ridiculous because they have their mortgages there. Like they have the Andreessen Horowitz 7 different hedge funds. One was like 2 billion in cash. I mean, I don't think we're so stupid.
The whole situation is pretty ridiculous. So it basically, if there's, even if a bank is fully solvent, and like as more information comes out, so there are a few crypto banks that have gotten into some insolvency issues. The biggest ones being outside of Silicon Valley Bank are Silvergate and Signature. And there are some like, I forgot who was talking about it, but they were saying that like Signature was never insolvent. It just like the rumors of insolvency led to a bank run, and then like the New York Fed ended up stepping in and taking it over. But basically, like all these positions that banks have, I'd say there's a chance that like 90% of them, in theory, are insolvent if something happens to them, right? Because they have all these positions outstanding, and they like, for example, if you buy like a mortgage-backed treasury at like 2% in 2020, and now it's the interest rate's like 5%, right? It doesn't get recorded as a gain or loss because it's still unrealized. The position hasn't matured. So as long as people don't ask for their money back, like if you deposit money into a bank and you just leave it there, regardless of the bank's position, that they're fully solvent until everyone asks for their money back, and then they aren't. So it's
It's
sort
like
of like
it's like Deltec.
yeah, exactly. It's like a self-fulfilling prophecy. But whenever this stuff gets spread and people start withdrawing large amounts, and now they have to sell these assets underwater and take losses. And then once they have to do this, now the unrealized losses are now realized, and then their balance sheet looks like shit. And then you get in a situation like this. So to me, it seems like this is a industry-wide issue. It's not necessarily just these three banks that are propagating the problem. There are probably like hundreds of regional banks in the US that have the same issues, but are just keeping quiet about it because, like, you know, like farmers in Nebraska don't read the news and are like withdrawing cash to their bed sheets and hiding it under the
They're not on zero hedge.
yeah, they're not reading. They're not reading zero hedge during their spare time.
I was wondering about some more USDC stuff. What's on Bybit? They have USDC pairs, don't they?
Yeah.
Quoted in USDC. How did you look at that? How did that go?
They had USDC. Oh, what do you mean? How did it go?
I thought they had tons of markets that are quoted in USDC.
Yeah, I mean, like it looked like crypto was pumping because USDC is pumping. If you looked at like the charts of like Bitcoin, like made local highs against USDC. No, the whole situation is like pretty interesting. Like even a lot of the like random stable, like so for example, if you look at the price, I was trading a lot of DAI USDC pairs because to me,
exactly. That's the perfect one.
I should always trade above USDC. In the case that USDC is worth less than $1, DAI has other forms of collateral, and in general, like on Oasis Dex or whatever, when you open up a DAI position, they're over collateralized. So at no point should DAI be trading below USDC, even if you believe USDC isn't worth $1. But there are times where like DAI was trading like a decent amount below or at par with USDC. So like it made sense to buy DAI. And then there's other stable coins not even related to USDC or DAI that like fell off peg for absolutely no reason, just because people were like, oh, stable coins are going to shit. Like the biggest ones were like LUSD, the liquid USD token, which is 100% collateralized by ETH. So absolutely no relation to USDC, but it went down to like 87 cents, which had like less than 5%. If you look at like its collateral, it's like less than 5% USDC. A majority of it is like a majority of the stables that it's actually backed by. Like, for example, if you try crypto and borrow MIM against it, you're depositing USDT, which is like Curve only uses USDT in their crypto pool. So it just made no sense that all these coins were falling off peg. So it just was kind of profitable to buy up all these.
For sure. All the panic. And how did it go in like the GLP pool, which I believe has some USDC? Does it?
Yeah, it has some USDC. I haven't looked into it too much, but I know like on the UI they put an announcement that was like the fees, that there was some issue with the fees, or that there was some issue with like the deposits and withdrawals from GLP, just because I'm pretty sure that in GLP USDC isn't hard coded at $1, but it still attempts to maintain a certain percentage of the pool as like a ratio, right? So like if stable coins are like 50% of the pool, maybe it's like 20% USDC, 20% USDT, and like 10% DAI or some other stable coins. So I didn't really look into too much, but it seemed like if the price of one of those stables falls, I still haven't wrapped my head around it, but it sort of messes with the contents of the pool, and maybe it allows for some like reasonable trades, but I didn't trade at all on GMX during that. I was mostly trading like perps, and then just like the random markets on chain, like Uniswap, Curve, stuff like that.
It's quite interesting how I feel like DeFi, because everything is like constantly, all the markets seem to be USDC pairs, right? I didn't really have time to react. I guess if things had gone on for a couple of weeks, it would be interesting to see how DeFi looked as a whole, because I didn't really see much commentary. No one was really freaking out, which I found quite strange. It was just like, let's just see what happens on Monday. And then Monday was okay. So we'll never really know what would happen if things got really catastrophic. But it evidently sounds like it was never going to go that way anyway.
I was hanging out at the time with two friends, and I don't think they had even access to the money. But everyone is just so battle hardened. Yeah, Jim, we might be able to guess who it is, but people are so battle hardened. They just went like, one person goes like, oh, I have like more than half of all my money in USDC. Another one goes like, oh, I have pretty much everything. And they just go about their day. Because it's like people have just seen so much in the last, I would guess, 2 years.
I actually don't think there was ever that much risk in USDC. I mean, like most of the risk was just panic. Like there wasn't any legitimate evidence or a legitimate reason to think that USDC was suddenly going to fall apart.
Was there a way to take advantage of some of this on DEXs with leverage, or was that easiest to do on SEXs?
Probably easier to do on like exchanges, but yeah, there were a few. Like I was trading a little bit on DYDX and stuff like that. But it's difficult to get that much leverage on, because like a lot of the markets that you could leverage trade on, like decentralized exchanges, are stablecoin versus stablecoin, and those get like for some reason those get quite a bit of volume. So like for example, in Bybit, you can go up, I believe 20x leverage on USDT, USDC, and like at some points like the funding rates were insane. They were like hundreds of thousands of dollars being liquidated like every hour or so for people to like over leverage long or short on one of the coins. It was pretty ridiculous.
So I know you guys have both read this. I haven't quite had a chance to look through it yet, but Arthur Hayes dropped his latest blog post, long form piece of content today, a good 31-minute read, which I haven't had a chance to look at yet. But from what you guys told me, it seems like he's just eternally bullish, right? Like it seems like this article is no different. Do you have any thoughts on what he said?
My favorite part of the article was that he was in Japan and he was describing his kaiseki meal, which is like one of my favorite styles of meals, and he somehow relates it to the current banking crisis. Basically, the way he relates it is he says is like the meal prepares you for like the green tea ceremony at the end. You always know that there's a green tea ceremony at the end of the meal, but you don't know like how you're going to get there. And then he relates it to the current banking situation, saying like, we all know what the end result is going to be, but like the path to get there is sort of unclear. But I think he talks about a bit of interesting things. And I think that these theories have been talked about a little bit, especially with like Signature and Silvergate and stuff like that. Banks that weren't necessarily in that bad of shape in terms of, like I was saying earlier, like all these regional banks that had these positions are going to take losses, whether they like announce them or they don't, or they just like keep their balance sheet clean. It sounded like, especially Signature wasn't in that big of trouble, but then there's a theory going on that basically these banks were targeted because the US government wants to eliminate like fiat on-ramps to crypto or remove crypto banking as a whole. And like, it makes sense. Today the news came out that any purchaser of Silicon Valley Bank would have to like agree with the government that they would completely cut out like the crypto department within the bank. But at the end of his article, basically what Arthur was saying was the Fed doesn't care about any of this stuff as long as the money stays in the system, right? Like if they have to bail out these banks, where people like go back to the banks and the banks continue buying government debt, or people are, you know, like consumers in the system, they're spending US dollars, they're circulating US dollars. Other countries are putting like their money, their treasuries in US dollars, or using US dollar purchase power. It doesn't matter to them. But what does matter is if people start leaving the system, if people start keeping their funds in Bitcoin, and then God forbid start transacting in Bitcoin, not using like US dollar on ramps. So like he talks a little bit about the Grayscale ETF, or even if there's a Bitcoin denominated or Bitcoin backed ETF that may get approved. And like I actually don't see why the government just doesn't approve an actual spot BTC ETF, because it's beneficial for them. So instead of people buying Bitcoin on their own and using self-custody, they use a centralized exchange. They buy Bitcoin through an ETF. They sell Bitcoin through the ETF, the money stays in the system, right? Like the only issue for them is when like you don't use the financial system or the banking system as we know it today. So it makes a lot of sense to me that they would use this. I mean, like the FDIC's number one priority is to protect the customer, right? To protect customer deposits in banks, because if banks fail, then like basically the whole financial system fails. But it seems like they're really using this as an excuse to sort of under the table go after crypto, because they see it as a legitimate threat to their way of doing things.
And I mean, you've been around for quite a while, so you know the meme, this is bullish for Bitcoin, which people would say, in what, at least on the surface to me looked horrible. Like when it was news that on the surface looked terrible for Bitcoin, to me, they would say like, oh, this is bullish for Bitcoin.
Yeah.
And it would be like, oh, media coverage is good media coverage. You know, first they ignore us, then they fight us, all these kind of things. I mean, I'm always curious about, if this is like the then they fight you part, then that is incredibly bullish, because that means, when you're scared of something, most of the time you shouldn't be showing your hand in this way.
Yeah, for sure.
Because then you give away to the opponent, then he also has the perception of his strength that he didn't maybe have from before.
Yeah.
So it would seem very, very clumsy to me. But then again, like, governments are notoriously clumsy, and especially the larger they are, they get very, very clumsy in the strategy, right? So it just seems odd to shut down these three relatively small banks and squeeze in the thing where you're banning the on-ramps and hoping it's somehow going to stop there. I don't know.
I mean, like, I think Bitcoin was built for this moment, right? Like the entire big point of Bitcoin initially was that you didn't have to trust the financial system. You didn't have to trust banks. You didn't have to, you didn't have counterparty risk, where the argument against Bitcoin is that there's very little counterparty risk in like US banks, because the FDIC is a very efficient organization, which I sort of agree with. I mean, if you look at how they handle the situation, like of all the US government inefficiency, like the FDIC, I feel is the one that's like most on top of things, that they're really good at like maintaining their monetary policy in order to like preserve, especially in the United States, the sort of like the banks and like the way of life there. I think Bitcoin was like built for this moment, right? Like at the point where like there isn't really a safe haven for your money. You can deposit in like the 4 or 5 major banks that like people deem too big to fail. But if you want to use like a regional bank or something like that, you have like what seems like decent counterparty risk. It should be in theory bullish for Bitcoin and crypto overall. And the fact that like if the US government didn't see crypto as a threat to this, that they wouldn't really go out of their way. Like what's the point of telling, like acquiring, like taking over a bank that's insolvent and telling prospective buyers, saying like you can't like buy this bank and relaunch it if you're going to continue the crypto portion of it. I mean, there's no other benefit to them. In fact, they might get like less equity or a lower valuation, because the crypto portion of the business is quite profitable. I mean, banking for these major crypto companies. So it does seem to me like it's like a targeted attack veiled as something else.
So that is, we're just going to call that bullish.
I guess as well, if banks were being if the government were being pretty smart about it, they'd literally just remove the on-ramps and keep the off-ramps, right? Like it just seems a bit but I guess that's a bit too, those are too, the shenanigans are too strong if they do that. It looks a bit too shady.
Only off-ramps. No, see, that is the Chad move, to say off ramps only. That's the Justin Sun Chad move. It's like, no, you can only buy my thing.
Did you see today that Justin Sun lost his excellency status? I don't know, it's like a random tangent.
What?
Apparently he's no longer his excellency. He got his diplomatic immunity from Grenada revoked, and I think he might have gotten his passport revoked too. I don't know what happened. So he might be on the market for China to hunt down sometime soon.
I mean, well, if they were hunting him down, that would have been the hunting down.
Yeah, I hope he's okay.
Yeah, me too.
My guy Justin's son.
Yeah, we need.
Yeah, no,
we need
he's
that.
On chain. So during the whole USDC fiasco on chain, he was like buying up like quite a bit of USDC, quite a bit of DAI. Vitalik was as well, which is interesting. It wasn't that much. Like I saw, or from his like doxed wallets, he was making like these $50,000 transactions from I think USDT to USDC when USDC went off peg, which is, I don't know, if you're Vitalik, are you really gonna, you have a time of day to make like a $50,000 trade in order to scalp like a few cents of profit, and it just seems kind of.
Yeah, I mean, in Justin's case, I didn't follow all the wallets that I believe to be him, but there were some, I guess, for his size, not huge. It was like a 32 million one, a few other ones.
Yeah, I mean, he was actually doing it in size. Yeah,
but yeah,
like
it's weird.
On chain, like it's funny. You track all the like the smart wallets, and like quite a few of them were buying up USDC. So. It seemed like to me that day when I was trading, and I was like, this is too obvious, right? Like people can't be this stupid that they're selling their USDC like on a Sunday before the banks are open. At like people are like market dumping like illiquid markets down to like 60 cents. The whole situation was ridiculous.
I was wondering, what does it mean when some people are saying that banks have an extremely high leverage? Like I saw someone quote like 156x leveraged after people started withdrawing funds. How do they do this math?
156x leverage. Yeah, I have no idea how that works.
Then we'll just
so basically when people start withdrawing funds, any bank doesn't have your money, right? Like if you deposit money into a bank and then the next day you go in and you say, like, I want to know what you're doing with my money, they're not going to tell you. That they're just going to be like, yeah, it's here. You can withdraw it, but your money in theory is there until like every member of the bank shows up, and then suddenly your money isn't there anymore. So it basically, in order to facilitate like the bank run, that they have to sell these assets that they purchased, and a lot of the assets are at a loss at this point, but on paper they're not at a loss until they're forced to withdraw the assets, sell them in order to pay you back. So as this continuously happens, right, the bank debt gets worse and worse. Like if more people withdraw during a time where a bank has underperforming assets, the more people withdraw, the bigger the bank's losses are. If no one withdraws, then the bank in theory suffers no losses. So it's kind of a lesson as to like how these banks work. And like the other thing I was just so confident about Circle was that they were just like completely transparent about their position with Silicon Valley Bank. They said immediately, like, yeah, we have money there. They could have said nothing, or they could have just denied it. I mean, there's no way for anyone to verify, right? And like I don't think USDT came out and said anything, but like a lot of these crypto companies probably had some exposure to Silicon Valley Bank as well, but just didn't, come out and say it. And the fact that Circle did, it to me, it was kind of like bullish on Circle, right? But to the market, it seemed bearish for everyone else, where the one company that wants to be transparent and start dumping their token, whereas hundreds of other companies like funds, exchanges that probably have exposure that are just keeping quiet about it and hoping the whole thing blows over, and nothing's happening to them. So yeah, the whole situation is just like, I don't know what else Circle can do. Like people are talking about online that USDC will never be like a functioning coin because the trust will be lost in Circle forever because it fell off peg, which I thought was like one of the most ridiculous things to say. Like, well, what is Circle supposed to do when idiots on chain are just like dumping into curve pools that are completely drained of other assets? It's not like just a Circle like market makes the curve pools or anything. Their job is to issue a coin and then back it at 1-to-1 to US dollar, and then want your US dollar back, you can redeem the coin at $1. And at no point was that at risk. And if you think about it, it operates the same as a bank, except for Circle is like way more transparent. Like if you look at the Circle site, like not only do they tell you like what percentage of their money is in cash and what percentage of their money is in, say, like US treasuries. You can even look at the dates of the treasuries, meaning like they have like certain expiries or certain maturation dates. And like all of that is transparent. If you go to your bank and ask like, hey, I deposited 100,000 like a year ago. I know you put it in some US treasuries. Can you tell me like when they mature and when my money, they'll be like, sir, this is a bank. We don't know.